Regional banks have been in the news for losing deposits lately and have been seen as high risk. For other alternatives and much more, listen and watch today the Homebuyer Town Hall, Florida. Welcome to the Homebuyer Town Hall, Florida. My name is Adriana Montes, your host for today's show. I'm delighted to be here at Climate First Bank, their new Winter Park branch. I'm here with the representatives of Climate First Bank, Chris Cucci and Chris Van Buskirk. Welcome, Chris Cucci. Welcome, Chris Van Buskirk.
Thank you, Adriana, for having me.
Thanks for having me, Adriana. Appreciate it.
The pleasure is mine, gentlemen. I've always been so impressed by your bank, especially with the name Climate First. It's such an impactful name nowadays. So I would like for our audience to hear a little bit more about your history and why the name, and just kind of give us a little bit of background on how you guys got started.
Yeah, thanks, Adriana. So Climate First Bank is a relatively new bank. We opened our first location in June of 2021 in St. Petersburg, Florida. And then about 9 months later, we opened our Winter Park location, the branch that we are in right now, which has been recently renovated. And as you mentioned, Climate First Bank has somewhat of a unique name, and that's because of what some of the focus that we have at the bank. So at Climate First, our primary focus is on lending that has a positive social and environmental impact. So while we do the things that any other community bank does, home loans, personal loans, real estate for commercial and small business lending, we also have a focus that we like to do loans that have a positive environmental impact. So, for example, we do real estate loans that are for green building construction, LEED certified properties, solar loans, and also electric vehicle lending.
Great. That's an amazing niche to have, Chris. So I always, like I said before, I always find that very impactful nowadays, and people are looking for ways to impact the environment right now and to make a difference. I've also heard that your CEO actually has had a very successful history in banking. Chris Van Buskirk, I would like to hear a little bit more about your CEO, how strong he is in banking, how he got started. He has a beautiful legacy that he's building in this industry, and he's like a great leader in the banking industry, which gives a lot of certainty to all of your clients.
Sure. Yeah, I actually started with Ken over 20 years ago at our first bank, which was Florida Choice Bank, and we were able to sell that bank. Then we started our second bank, which was First Green Bank, which I kind of consider a practice run of this bank, and we were able to start that, and then we sold that to Seacoast as well. But it's been a long journey over the time. I think we've grown a lot, and Ken has been a mentor of mine for 20 years. And like you said, he's really changing the industry now, and kind of started at our last bank, but he's really pushing the envelope here, doing a lot of things, frankly, that most community bankers do not do.
Wow, that's so uplifting to hear, especially nowadays that we have been having some of these news about regional banks having trouble. So what kind of light can you shed on our viewers, our listeners, about how they should feel about regional banks versus community banks? Anything that you can share, because nowadays this is a very, very sensitive topic for anybody for all of us that have deposits and want to make sure that our money is safe.
Yeah, so Adriana, one of the things that I think is important for people to understand is, first of all, when you talk about deposits, FDIC insurance, and understanding how you can use FDIC insurance rules to maximize the amount of deposits that are insured at one bank. Many people think that all you can do is $250,000, but that's not true. If you structure accounts properly, you can cover up to a couple million or even more of dollars at one bank with FDIC insurance. More importantly is looking at the banks that you're working with. So as you mentioned, we've had a couple of bank failures in the past couple of months now, which is really scary for people, because when you bank somewhere, you want to know that they're safe and secure. One of the things that we're very fortunate with at Climate First Bank is that we are such a young financial institution. We don't have a lot of the risk on our balance sheet that some of these larger regional banks are exposed to. So that makes us a much safer place for our customers to bank. We give them very high interest rates as well on their money, so they're earning a good return. And then again, we also offer some solutions so that we can provide FDIC insurance to our customers all the way up to $50 million. So well above what most customers would carry. They can know that their money is safe with us. So I think it's important for customers to ask the questions of their banker to see if there are any programs out there for them that can help to protect them with their insurance coverage.
Thank you, Chris. You bring a very interesting point about other banks, about you guys being in business for less time, for a short time, but other banks carrying this high risk on their balance sheets. Can you explain a little bit more about what kind of risk that would be, or how would that look like?
Yeah, so if you look at the banks that have had struggles and the ones that have failed here recently, the main consistent thing with all of them was that they were heavily invested into long-term treasuries, U.S. Treasury bonds. And the risk with those is that in the past year, as interest rates have gone up, the value of the treasuries themselves has gone down. So they move inverse to one another. So when interest rates are going up, the value of a treasury bond is going down. So many of these large institutions had so much of their capital invested in those bonds that when the market rates increased suddenly and very rapidly last year, that caused the value of their investment portfolio to decrease very rapidly. And then you have, along with that, the fact that there's less money in the market today, less deposits because of inflation. People are spending more of their dollars and saving less of their dollars. That caused a squeeze for these banks, where they no longer were solvent. They no longer had enough money to operate, safely and soundly. So that's one of the things that we encourage people to do, is to look at your bank and to see what kind of exposure they have to treasuries.
Thank you for the detailed explanation. And in regards to that, so the administration recently said that they're going to cover those treasury bonds at par value so that these banks don't keep on failing. But do you actually see that as a long-term solution, or what is your opinion on that?
It's really hard to say, because this is the bond markets have been on what they say on a bull run for 40 years. And if you think about over the last 40 years, very consistently rates have been going down. So as rates are going down, the value of bonds has been increasing. So this is a new problem, what we're seeing now, with a rapid increase in rates over a short period of time and those bond values dropping. This is a new challenge. And I think that's what makes it interesting, but also very scary, is that this is something that we have not really encountered before. So it's going to take, I think, a lot of maneuvering by the Fed with how they treat interest rates going forward. So they want to continue to keep inflation at bay, hold inflation down, but at the same time, they can't continue to raise rates probably at the same velocity, because that could cause a shock to the economy that could push into a recession. So it's a tight balancing act that the Fed has to play right now. And it's hard to say how that's going to play out because it hasn't happened before. So I think these next 6 months or so are going to be very interesting for our country.
Yeah, we all hope that in May, they just stop raising and increasing interest rates. But for me, I kind of see this as an analogy of when we had COVID, that we had never experienced such a crisis in the health system, such a challenging in all areas, like having to stay at home, having to work from home. But I hope that there is something positive that comes out of it. Like right after COVID, we all learned that we can run businesses from home, that we can travel and do Zoom meetings, we can be recording these kind of shows in Zoom. And then the value of a home became so much more present, of just not only being a place where you sleep or where you have a family, but also where you can work, where you study. So I really, my positive outlook on this is that through all these challenges that we're facing right now, we actually come out in the green and in a better place for our economy system. So we have discussed that regional banks have been in the news lately for having issues with deposits, like we just said, and also for high risk assets that they have on their balance sheets. Chris, what alternative can the audience, everybody that is listening, watching us, have for their deposits, and what is your recommendation for them to do?
Yes, I think you look at two different things and kind of combine to make your decision, and that's risk and reward. So from the reward standpoint, go out there and look at the banks and see what banks are offering good interest rates, because you want to get a good return on your deposits that you keep with them. But on the risk side, of course, you also want to look at those banks and make sure that you're putting your money in a safe place. So again, if you're depositing money that can be fully FDIC insured, you really don't have anything to worry about. If you're a large depositor and your deposits are going to be more than what the FDIC insurance would cover, that's when you want to just look a little bit more closely at the bank that you're working with. So most of your larger banks and large regionals are publicly traded. You can see all of the information out there. And then if you're working with a small privately held bank like Climate First, you can just ask. We publish our financial information every quarter with the FDIC. So we can show you exactly what we're doing with the money that comes in. And with a small bank like ours and many other small community banks, it's pretty simple. The money's coming in deposits, and then we're putting it back out in the market in the form of loans, small business loans, commercial loans, that sort of thing. So not really heavily invested, not buying securities. I think that's the kind of thing you want to look for as a bank who's keeping things simple.
Thank you. Thank you so much, Cucci. You bring a great point, which is that you are offering amazing commercial loans is your strength, and that makes your balance sheet and your bank very strong. So, Chris Van Buskirk, I want to bring you in so that you can give us a little bit more light onto. You also said that your CEO is doing things that are very innovative in the banking industry. So I kind of want to hear from you in regards to that, and also in regards to the commercial loans that you are offering.
Sure. I think our most unique product is a long-term solar commercial loan that we do. It's a little bit outside of the normal lending box. A lot of banks do not like to do those types of loans. And with our mission, that's something that we look at quite a bit. Doing a big industrial type building, putting, a couple hundred kilowatts of solar up on there. Again, that's something that historically a lot of banks like ours don't like, bigger equipment type loans. But I think that's one spot where we have that niche, and we're trying to do some of that business, kind of building off of our consumer solar platform as well. So we're looking to transition that to some more bigger loans to help the environment more, to help our clients more. We just saw, I think, April 1st, so coming up here tomorrow, our local utility provider is up 20% across the board. So that's something right there that can save folks money, and there's all kind of tax incentives on the commercial side as well, which are excellent. So right now, I think that's one of the best products we have.
And I understand that this administration is actually pushing forward for a more green environment and giving a lot of incentives, pushing that way. So that's actually very good for your bank. What type of commercial properties do you lend? What kind of terms do you offer? LTV, interest rates? Do you have SBA loans? Kind of a little bit more details. You have a lot of investors that listen to the show, and I kind of wanna offer them, and kind of teach them about all of your options, because you are one of the leaders in this industry, especially you're building a great market share in Florida.
Sure. Like Chris said, I mean, our mission is to make a social or economic or environmental impact, but we also do all the traditional products as well. So we offer everything from C&I loans, equipment loans, on the commercial side, lines of credit. So basically the full C&I package we can do. In addition, all the real estate loans, whether it's owner occupied real estate, commercial real estate, maybe some combination of both. We can handle all those as well. And I think we've grown pretty substantially since we've been in business just a couple of years. That kind of shows, commercial lending is, I believe, what I think our bank does best.
Great. And I'm myself as an investor, I believe in building a relationship with a bank. For 20 years, a bank at a large institution, and that got me no PPP loans, no type of commercial loans. I mean, somebody knew my name at a branch, but that was pretty much it. So I think your bank is a great place for somebody to establish a relationship with deposits, a relationship with loans. kind of a relationship where you take the time to see their whole financial picture, where they are, where they want to be with their investments, if it's residential, if it's commercial, and kind of build that relationship where it's truly a partnership. You know, it's not like they're just a number, another number, but you truly care about growing that relationship. And that's one of the things that I have appreciated about myself banking with you guys, and kind of seeing that truly care about, hey, how can we grow this relationship? How can we help you? And kind of make it very personable. I think nowadays we are moving into relationships that are more personable, and not understand the big banks kind of show like they have more security supposedly, but banks that have really good investments like you guys, you know your clients, you know what they're doing with their businesses, how they're managing their enterprises, growth plans, and all of that. That gives you a really good strength for the bank as well. So I want to hear from you. Why are you passionate about your clients? Why are you passionate about working with them? What's your passion, and what wakes you up in the morning and say, I want to do this, and I'm so proud to work at Climate First?
The relationship really, to me, is the key, especially if as you've been doing this for 20 years. We have a lot of clients now that are starting to transition into a more part-time type role, or moving in their business, and they're bringing their kids in. So, you know, you really have to have a strong relationship to continue to bank these folks. And, you know, you got to know their business in order to do that. And you got to spend time with them. I think one example that I gave the other day, kind of relating back to the FDIC insurance, that Monday after the banks failed, we basically called every single client in our bank that had over that amount of money. And, you know, that's, to me, that's a relationship. We wanted to pick that phone up, call all those clients, tell them that everything is going to be okay. And we've got some great options that we can get them into. Like Chris mentioned with the FDIC, the big products there. But it really comes back to just knowing your customer, and then you can anticipate their needs. You can see what they need. You can react quickly, especially when you understand their financials and their financial perspective. You can really move more quickly. And in this banking game, it really is who can deliver timely and accurately, deliver that commitment letter to the client. And that's, you know, that's what it comes down to.
So we have been in a very changing environment since 2020, and then we had real estate prices going up in 2021, 2022, unprecedented appreciation in Florida with all New Yorkers moving here, people from California, all other states. So real estate has been booming in Florida, and now we have so much uncertainty about interest rates. But it is still, we know that real estate is a great vehicle to create wealth. And especially commercial real estate is a great vehicle to build that legacy for your family. So Chris Van Buskirk, I want to ask you, based on today's environment and also based on being a real estate investor, wanting to build that legacy for your family, generational wealth, real estate, I want to hear if you have any tips for our listeners and our investors in regards to our environment, in regards to commercial real estate, and in regards to getting loans.
Sure, thank you. I would say, I mean, this just goes back to what I think. I think upfront is, to me, is the key when you're applying to the loan. If you've got your file in order, you have all your financials, you're very organized, you've done some initial underwriting on the project, and it makes sense. It's a lot easier to get those types of deals done, obviously, because we've got to have, you know, we're regulated by the auditors, and with cash flows and LTVs and all these other things. So it's a lot of it, I think, is having a good vision up front, you know, having all your financials in order, and having a relationship with that bank. Even if you don't need a loan, a lot of times it's a good idea to start that relationship building early, prior to you applying for the loan, because then the relationship has started. So we see that in a lot of clients. Hey, I'm looking for a building. Here's what I'm looking at. What do you think? I want to do some value add. I want to do this. So I think starting that relationship early and asking questions and bringing your lender in early for those discussions is real key. That's how you get them on board.
So basically, having your banker in your right pocket is the right solution. Well, relationships is all what life is about, right? I mean, the meaning of life for me, especially, is like relationships, having friendships, having people to share experiences with. And why not have built the same relationship for the people that you bank with and you go to present business opportunities and be able to get their support and be able to get the products that you need for that. So, Chris Cucci, I kind of have the same question for you in regards to the environment that we are right now in 2023, in regards to how to get loans, how to invest in real estate, but also if you want to expand in addition to that, to like what kind of markets are had right now in commercial real estate that maybe some of our listeners and investors should learn more about.
Sure. So definitely echo Chris's comments that relationship matters a lot, especially now. Big banks, the largest banks in our country, have slowed down a lot on commercial real estate lending. So that means there's less capital, less money out there in the market for commercial loan dollars. And when that happens, the smaller banks like ours are able to be more selective. So when we're seeing new opportunities, we're going to first look to the relationships that we have. And then the other thing we focus on a lot is experience. So it's a tougher time for newcomers. If you're brand new to commercial real estate at this stage in the market, my advice would be to partner up with someone who has a lot of experience, because the bank is going to be more comfortable lending in that situation if we know that you have somebody partnered with you who has experience in commercial real estate investment development. As far as opportunities in today's market, we're at an interesting time because a lot of commercial loans are typically 5-year balloons. So those rates from a loan from 4 or 5 years ago are about to reprice now. And where rates were 5 years ago and where they are today. So what's going to happen? Rates are going to jump up considerably for a lot of people on multifamily, office, retail, industrial assets. When those rate increases happen, you have to wonder, are the properties still going to be cash flowing and performing as well as they were with the very low rate environment of the last few years? The other thing in Florida you have to look at is insurance costs. Insurance costs are skyrocketing now in this year. So when you're looking to buy a new property, you have to realize that what the seller is showing you on paper may not be the same cash flow that you're going to see, because your insurance costs are going to be much, much higher than what they've showed historically. So I would say to definitely be in touch with an insurance broker. And if you're looking at any new commercial properties, make sure that you get a quote from the broker so you know what the real cost of insurance is going to be going forward before you enter into an investment.
Thank you so much. Thank you so much for that valuable information, and so true. You have so many factors that have changed in this environment, especially in Florida with insurance costs and real estate taxes. And just walking into your branch, I saw this flyer about 5% CD for 6 months. So, I mean, maybe it's not a bad option to just put your money sitting for 6 months in the bank and just kind of relax, go for a vacation and make the money work for you.
Absolutely. Yeah.
So as far as our closing statements, again, I want you to tell us about what kind of deposit promotions you guys have, Climate First right now, which are very attractive. And anything else that you want to share with our audience? Chris Cucci?
Yeah, so deposits, as you mentioned, we have a 5.01% APY CD. It's very low commitment, only 6 months. So 6 months you can park your money and earn that rate just over 5%. Also, if you're looking for something that has no commitment to it, you can do a savings account. We have our super savings account, which is a 2.75% APY. And what I tell real estate investors is, listen, you're taking risk when you're buying a piece of real estate. Cap rate environment is still very low in a lot of commercial real estate. So if you're looking at a 5% cap on a property, why not park that money in a CD for 6 months, wait and see how the market is going, and then you can always access those funds later if you want to invest in real estate, but you can enjoy something safe and sound for your money for now.
Wow, fascinating. So you're trying to tell me that, I mean, historically, owning and investing in a CVS and Starbucks and a Walgreens has a cap rate of 5%, and that I can put instead my money at your bank at 5% and just basically don't have to move one finger. That's pretty awesome nowadays. So yeah, that's a great opportunity for investors and for all of us to think about that seriously. And I want to bring in now Chris Van Buskirk to also talk about any offers, specials, or anything else you want to share with us about your bank.
Sure. I would echo Chris's comments. I think one of our best products right now is the deposits. I think the second best product we have, especially locally here in the Central Florida region, is our consumer loan product, or our consumer solar loan product. It's a 25-year fixed rate. It'll allow you to lock in your utility costs. And we just mentioned locally, those are going up 20% starting tomorrow. So that's a way to hedge future energy cost increases, plus lock in that rate. Still pretty strong rates on a 25-year fixed basis. And living in Central Florida, of course, you know, we have the sunshine to do it.
You're right. We are in the sunshine state. Florida is state for sure. And I see this as many opportunities in a challenging environment. We're still seeing great opportunities by these CDs and these rates that you're offering. So thank you so much, Chris Cucci. Thank you so much, Chris Van Buskirk, for being in the show. You have brought a sense of peace for all of our listeners in regards to deposits, in regards to coming to your bank, all of these options that you're offering for deposits and for loans. Thank you so much for being in our show.
Thank you.
Thanks, Adriana.
We have had such a great show today, learning so much about how community banks are such a great alternative, especially Climate First Bank here in Florida. I appreciate you watching and listening to our show. Please follow our social media, Instagram, LinkedIn, Facebook, and also subscribe to our YouTube channel. My name is Adriana Montes, and you can reach me for any questions that you may have for residential or commercial real estate. I am a walker of the talk of real estate. I invest, I buy, I sell, I do it all. So please call me. My number is 321-689-6258, or my email is adriana@floridadreamsrealty.com, and my license is BK3096165. Thank you for watching.